It's Friday, January 15, 2021, episode number 154, Biden Social Security tax hike. It's 5 Minute Friday. It's a 39.6 Facebook and YouTube live finance show. A show that teaches high earners like yourselves how to make your money work for you so you don't have to work for your money. We talk general investing, taxes, real estate, syndications, Airbnb, paying for childcare, paying for college, and even the car you drive. Today's episode, the Biden tax plan for Social Security. All right, we already discussed in episode 150 the likely or the tax brackets that he had proposed over the past year during his campaign. And he did discuss Social Security as well. However, it did not garner as much attention, at least in my opinion. And that's because, I know a lot of people chalk this up to being impossible. And for some people, this maybe didn't matter as much. But currently, the way Social Security tax works, it's per individual because the benefit is per individual, like an IRA or 401k. Last year, 2020, for the first $137,700 you earned on W-2 as a paycheck, you paid Social Security tax on that, 6.2%. And so did your employer, 6.2%. So it's 12.4% in total. But then after that, it caps off. So it's interesting. Social Security tax is like the only tax that's a flat tax and then has a cap. Okay. The other taxes, for example, federal tax starts at 0 and then it goes up higher and higher and higher. Medicare starts at 1.45 and then it bumps up to 2.35. But Social Security starts off at 6.2 and then it stops for each individual when they hit a level. Okay, that level last year was 137,700, and for 2021 is going to be 142,800. That's considered the Social Security wage base. Okay, so if you did 142,800, 142,800 times 6.2%, that's going to be $8,854 per person. Okay, so times 2, that could be $17,700 between the two if there's 2 people married and they're each at the wage base or higher. Pretty easy if you have 2 docs. Okay, so Social Security actually, for the amount of money you put in and the benefit you get, it actually is very reasonable depending on how much time you put into putting into Social Security. And assuming, well, if you have 2 people, it's not quite as much. If you had 1 person, though, the benefit for the amount you put in is actually pretty good. However, the Biden tax plan plans to increase taxes for people at $400,000 or more, which we discussed from federal taxes. But the current plan, at least as he proposed, was that Social Security tax is going to come back into play when you hit $400,000. So it would be 6.2% up to $142,800. Then it would be 0%. So you'd be in like this donut hole until you hit 400,000. Then at that point, it'll go back to 6.2% all the way up. Now, this is a huge deal because if you're going to put back 6.2% at the $400,000 plus income, and that's employer and employee, that's 12.4%. But now that's hitting your top tax brackets. Okay, so it's one thing when it's being done at 0%, 10%, 12%. But when you're adding it onto your high income, that's gigantic. So if you're up at 39.6%, and then you add 12.4% on top of that, you're up to 52% as your marginal tax rate. So the bump in federal tax brackets, if we're talking about bumping up to 39.6% from 37%, that's not that big of a deal. It's 2.6%. If you're going from 35 to 39.6%, that's 4.6%. But that's still not that big of a deal compared to adding 12.4%, assuming the employer and the employee. Now, like if you're like a partner in a group, like I am, and you're paid on W-2, you only see that 6.2% because your W-2 is 6.2%, but that other 6.2% the employer paying is still coming off the business profits, which otherwise would go to shareholders. So it's still 12.4%. It's gigantic. So what can you do? One, not take as much money as a W-2. Ideally, if you have K-1 distributions that you can take to bring your individual income down to below $400,000, that would be ideal. The second thing, other pre-tax deductions, if you can maximize a cash balance plan in addition to a 401k, those are the easiest potential ones for the very high earners, because cash balance pensions can have very high limits depending on how much your company is putting to all the other employees. So things to think about, but yeah, a 12% Social Security tax hike on top for the high earners, that is actually going to hurt a lot more than the federal tax brackets. Hasn't gotten much steam and people talking about it, but if something like this goes through, which definitely could, because Social Security is well underfunded, and we have Democrats in the House, the Senate, and in the White House, I wouldn't be too surprised. So it might not happen this year, but definitely for next year, something to think about. But I would look into considering planning for it to happen in some way, shape, or form sooner rather than later, because they can change tax laws like in the middle of the year or the end of the year, and you don't have much time to plan for it. So FYI. All right. Have a good night until episode number 155. Again, this is for my entertainment, hopefully yours. This is not legal, financial, professional, accounting, or any other advice. Please consult with your own financial professionals before making your own decisions. Have a great night.